Hey everyone, quick question. Are you about to buy a home and are totally confused about whether FHA or conventional loan is right for you? If so, well, you're in the right place. Welcome to 2-Minute Tuesday. If you're new here, well, these videos in this series are for first-time homebuyers. Well, actually not just first-time homebuyers. Really, these videos are for anyone interested in learning more about the ins and outs of real estate. So, if you love fast, practical real estate tips, you should enjoy today's topic. Today, we're going to be breaking down FHA versus conventional loans. Now, what makes them different and how do you figure out which one fits your wallet and your goals? Well, really quick though, thank you for dropping by and watching this video. If you find this helpful, informational, or even fun, do me a favor and give this video a like and hit that bell so you know when the next 2-Minute Tuesday arrives. And actually, while you're at it, leave a comment down below and let me know where you're watching this video from. Now, let's get into it. And actually, let's start with the very basics. Both FHA and conventional loans are ways to finance your home, but they do have some key differences that can really affect your budget, your credit, and even how much money you need to bring to the table. Now, FHA loans, well, they are backed by the Federal Housing Administration. They're extremely popular with first-time buyers because they typically require a much lower down payment, sometimes as little as 3.5%, providing your credit score is above 580 or higher. Now, these loans are much more forgiving if your credit score isn't perfect as well. So, for example, even with a credit score below 580, you might still qualify. Now, the kicker is that the down payment requirement, it does go above 10%. Now, the trade-off here is this. FHA loans require mortgage insurance premiums, which can make your monthly payment, well, a little higher. Conventional loans, on the other hand, aren't backed by the government, and they usually require a higher credit score. So, for example, a 620 score is usually the minimum, the floor for a conventional loan. The higher your credit score, though, the better interest rate that you get. But if you qualify, well, you can avoid paying mortgage insurance if you put down at least 20%. Now, as a result, the conventional loans, well, are a little bit more flexible for buyers looking to make larger down payment. Furthermore, conventional loans are a good option if you want to pay off your loan faster. I mean, after all, with a larger down payment and a lower interest rate, you make more headway towards paying off the loan. Now, let's tackle some of the common questions. Buyers often ask, well, which loan will save me the most money? Well, and this answer depends on your financial situation. For example, let's say you're buying a home that is $700,000. With a FHA loan and 3.5% down, you'd pay around $24,500 up front. However, your monthly mortgage insurance could add a few $100s a month to that total. With a conventional loan, if you put down 20%, that's going to be about $140,000. You avoid insurance, and your monthly payment could actually end up being lower in the long run. Now, of course, the biggest difference here is, not to be Captain Obvious, is the down payment. Now, I don't know about you, but I haven't met all that many first-time homebuyers that have $140,000 sitting around for a down payment. Now, there are considerations for sellers as well. Now, one of the first questions sellers often ask is, well, does it matter what kind of loan my buyer uses? And, well, the short answer is no. Not really, but FHA loans, they do have a stricter property condition requirements. Now, this means your home might need to meet certain standards before it passes inspection. Conventional loans are, well, a little bit more flexible in this regard. Now, here's what I mean. FHA loan requires the property to meet specific safety, security, and livable standards. So, for example, the home must have, functional heating system, safe electric wiring, a structurally sound roof, and no major safety hazards like exposed wiring or mold. Even cosmetic issues like peeling paint on older homes can sometimes need to be addressed. Conventional loans, on the other hand, are a little bit more flexible. Lenders are most concerned with the home's overall market value rather than the strict safety standards. Now, minor cosmetic or maintenance issues typically won't block approval as long as the home is structurally sound and habitable. So if a buyer is using an FHA loan, well, small repairs or safety updates might be required before closing, whereas with a conventional buyer, well, could move forward without worrying about every minor fix. So how does this all play out in the real world? Well, here's a scenario for you to chew on here. Imagine Celine, who has a credit score of $612,000 saved for a down payment. A FHA loan would be perfect for her credit score and financial situation. Meantime, James, let's say he has a 780 credit score and 70,000 saved. Well, a conventional loan could save him thousands in mortgage insurance over time. Really, it comes down to using different tools for different situations. So what's the takeaway with this? Well, FHA and conventional loans each have their perks, and the right choice, well, it really depends on your credit, your savings, and your long-term goals. The best next step? Well, chat with your real estate agent or mortgage professional to figure out which loan fits your life best. And of course, as a licensed real estate agent right here in California, I can also give you my 2 cents if you like. Drop your comments down below and I'd be happy to help, or reach out to me. And while you're at it, check out my other 2-Minute Tuesday videos for more quick tips to make your home buying experience that much smoother. All right, folks, that's going to be it for another 2-Minute Tuesday. As always, if I don't see you around, I will see you in the next video.